All right, let's kickstart things with Nigeria. Oando Plc reporting a 267% surge in profit after tax for its full year 2024 performance. We're going to get into the details of the performance of the company. Also, its reserve-based lending facility, that also has been increased $375 million with support coming from the Afri-Exim Bank and Mercura. We also got a quote from the Group Chief Executive Officer of Oando Plc on their performance. That is, of course, Mr. Wale Tinubu, commenting on the results, talking essentially about how, despite having a challenging macroeconomic environment, the company still recorded those stellar results, also referencing the NAOC acquisition and underscoring the resilience of the company's business model, also saying they're going to be focusing on a lot in 2025, from their balance sheets to security, enhancing operational efficiency, and more. Arise Business Analyst Chika Mbonu joins us to discuss those results, because Chika talks about aviation, oil and gas manufacturing, and so much. Who better to discuss with us? Good morning, sir. Thanks for joining us.
This is how are you today?
I'm fine, thank you. You're very, very welcome.
I mean, there's a quote from one big book that says, "Can anything good come out from Nazareth?" You know.
Yeah, I know that quote.
It used to be at the time that if you talk about Oando, and it's like, Oando, is anything going to happen there?
Right.
You know, why are you talking about that? You know, to the next years, you know, let's put it this way, that 2024 financial year, the performance was actually a transformative pivot for Oando. You know, basically anchored on the landmark acquisition they had for NAOC, you know, an upsurge in their upstream operations, and of course, you know, the other thing that has happened is that you mentioned it in your rundown. It's the improvement in their capital structure. And so very good performance they had in 2024. From the up line, you look at the top line there, revenues, it grew by 44%, from 2.9 trillion to 4.1 trillion, as you mentioned. You know, massive jump for them. But the interesting one is the bottom line, profit after tax. You know, from 60 billion in 2023, they printed 220 billion in 2024. A massive 267% growth in their profit after tax. So you ask yourself, what could have happened, could have caused all these things? You know, the revenue driven by principally FX gains, and then massive, strong production volumes. Again, anchored on the NAOC acquisition, you know, which have helped them, you know, drive their top line. The other thing that helped the profit after tax, as I told you, 267% boost. You know, you have the issue of the lot of operational gains, again from the acquisition, from NAOC's acquisition, and then so they have you know, bigger reserves now and bigger base to absorb their production, their costs. So that came in for them, and of course, disciplined capex, and that. You know, I mean, we are not here to just parrot the good ones. You know, so I mean, you could see also that the operating profit margin was low. You know, and then the administrative cost was high. So that they need to watch. You know, and the best analyst the anchor that I know you are, I'm sure you're going to ask me. You know, what has been the impact of NAOC really?
Of the acquisition.
On the acquisition.
Exactly.
$783 million, remember? We celebrated that.
You were here with us to talk about it,
and we said we gave the accolades to the Tinubu administration, because remember, these transactions have been on the table for a long time, you know, and they came in and then, you know, let that happen, you know, along with the Seplat one and the Renaissance Capital one. You know, that acquisition was major for Oando. You know, basically it doubled their working interest in key OMLs up to 40%. You know, the other thing happened was they boosted their 2P reserves to almost 1 billion, you know, barrel of oil equivalent.
That's huge.
You know, that's massive for them. And then the long-term revenue visibility improved and asset base also improved. And so Oando has been turned from taking their rightful place back now as one of the top upstream players in the country. And the acquisition gave them greater autonomy. Because unlike before, where they were just outsiders in the OMLs, waiting for dividends, now they are there making the decisions. They also had a reserve control. They could control their reserves also. And then most importantly, they had access to production cash flows. Unlike before, they were just outside there borrowing without and that. And so the production volumes moved up. Average daily production moved by about 3% year on year, you know, to almost about 6 million barrels 30,000 barrels of oil equivalent per day.
Yeah.
Now, sometimes when you hear 3%, we just say things is small. But remember, it's oil they were talking about.
Yeah.
That with $1, 1 barrel, about $76.
Yeah.
And then the crude output moved by 22% also. That's massive for them. Driven by the NAOC signages, acquisitions. Because of better off-feed time, about 80%. And most importantly, the operational safety. Throughout that, they didn't have any, how oil operation has challenges. They didn't have any problems with that, with their operations. Okay. So that's that. So the summation of the NAOC acquisition, operational efficiency, larger base of preparation, improved output, helped to cement the revenues and the profit that you had.
Fantastic. The reserve-based loan facility.
Lending.
Yes, the lending facility.
Very important. Very important.
Yeah.
You remember that most of the time that I came in here, I sounded like, the agony uncle for Oando. And I said, see, there's no need having 1 billion barrels, of oil down the ground, inside the ground, if you cannot bring it up. So Oando has successfully done this acquisition now, and they need money.
Yeah.
And I was begging the banking system to support them in that respect. So we're happy to celebrate that, there are 250 million originally, reserve bending line with aphorism, which they pay down to actually $100 million, $100 million dollars, having up to $375 million dollars.
Yeah.
And so that's the lead financier, as aphorism as lead financier, and co-arranger of Mercury ICR Resources. Okay. And it has a lot of implications for them. Of course, we know. The first one is liquidity boost.
Yeah.
Now, Oando has the right working capital to run the operations. They fund their drilling operations and the rigorous interventions. Again, what will happen is, output will be higher.
Yeah.
As a growth catalyst, Oando is angling for, by 2029, to reach 100,000 barrels a day.
That's ambitious.
2029.
Yeah.
So this is put them on that trajectory.
Yeah.
And of course, 1.5 million barrels cubic feet of gas per day. That's all that. And of course, most importantly, remember, one of the things we also had when we were analyzing Oando was the leverage. So this coming in, this fund coming in, we enable them, replace expensive funds, better cash flow, and then lower interest rates for them. Okay. And so what do we see going forward for Oando?
Yeah, what's the future look
What's
like?
the future look for them? And one thing for me, I know, is NAOC acquisition becomes a major issue. Okay. There's opportunity for them now to drive the what I call the acquisition imperatives to gain advantages of the acquisition. They've been carrying the cost. So now let them run it for a full year and the remaining years of 2025 and then go into 2026. And of course, capital acquisition assets efficiency. That happened. And then security, becomes a major issue.
Wale Tinubu mentioned
that. About security.
Yep.
Remember that this is onshore assets. Yeah. And part of the reason why those IOCs, let them go was because of the security challenges they were having. So because Oando people are natives, so they've engaged the community and then have installed sophisticated security apparatus that will help them, predict, challenges. This will help also in them going forward. Okay. And of course, the next thing, as I said, is cost optimization. With the merger and with the acquisition, lettering out now, they're going to have better acquisition. Yeah. And of course, debt restructuring, which I thought about already, is very important. With the reserve bending loan they have, it will help the capital structure, reduce the interest costs, and then more cash flow will be released for them to fund their operation. So I expect a stronger close for 2025. Okay. 2025, a stronger close for them 2025. And for me, Oando is no longer a turnaround story. Right. I mean, as an analyst, I can say that boldly. A lot of people come to me in my personal something. I say it's a turnaround. It's no longer a turnaround story. They're in a growth phase now, and they shift from the trading heavy company, to an upstream heavy company now. Yeah. Was ordered, was structured, was intentional, and that will take them to where they are supposed to be. Okay. And I have a feeling that now with the money they have now from this reserve bed lending, money is available, cash is king. Yeah. A lot of things will flow from the place.
It's a good time to be an oil company in Nigeria, especially with the administration's focus on more production. Yeah. All right. As you said, business analyst, oil analyst, aviation analyst, banking analyst, Chika Mbonu, thank you so much. I appreciate your deep dive on those results. Thank you.